All right.
Hold on, I'm waiting for the link that I can share.
But the sign I have that says meeting is now streaming live on YouTube. That's
There we go.
not
And
sufficient.
Steve is here. Perfect timing. Look at that.
Aha! There we go. Somebody knows what they're doing. That's much better.
Hello?
Cool.
Hey,
All right, Steve. Steve, you're on, Steve. Just so you know, we're live. I'm gonna step away. Josh is gonna.
now streaming live on YouTube.
Yep. Josh is gonna intro. I'm gonna share the link everywhere.
Perfect timing. Look at that. Aha! Here we go. Somebody knows what they're doing. Major echo on somebody's part.
That was
Oh,
me.
that would
My bad.
be-
I didn't realize it was coming for me for the whole time. I was like, what's going on? Okay, so Steve, I'm gonna head out, put your camera on, and then Josh, you are good to go. I'm gonna pass over the host privileges. All right, guys, I'll talk to you soon.
Take it easy. Okay. Steve, you are on mute.
Hello.
Here we go. Okay, so this is Genius Wednesday. I believe that we are live and streaming on YouTube, and if we're not, then we're just going to have a good conversation amongst ourselves. I am Josh Lawler. I'm a partner at the law firm Zuber Lawler, where I practice securities law, finance, and intellectual property, much of which revolves around digital ledger technology and digital assets. We have with us David Weisberger of CoinRoutes and Steve Kwan of, I'm not entirely sure, Steve, where you're of actually. We'll get to that.
I'm from Parts Unknown, and I have a family office that does investments in pretty much everything, but I got lucky in cryptocurrency and blockchain. So I met all of you guys and I actually enjoy doing this. So this is my nice break from the real world where I kind of get to talk with the guys and
Very nice.
talk about Bitcoin and stuff.
All right. So we've had a very interesting couple of weeks, which we're going to get to. Before we do, just a quick disclaimer. Nothing you hear from any of us is investment advice or legal advice. Everything is personal opinion only. And while we do hope it's educational, you should always do your own diligence before making any kind of investment or legal decision. So David Weisberger, what have you seen lately?
Well, so yeah, just as David said, just for background, so I'm the CEO of a company called CoinRoutes, and what we do is we provide software for people to trade cryptocurrencies. So our platform allows you to algorithmically access or buy or sell across over 40 different liquidity pools in virtually every crypto asset that one can think of that is fungible, not NFTs. But so, our platform trades well, we're pushing 2 billion a month in volume through the platform. We're getting very close to that these days. And, we're seeing a lot of activity. Interestingly, obviously, there's been a lot of volatility over the last couple of weeks, in particular the last week. We saw a particularly brutal sell-off, but that's nothing new. People who've been listening to us talk will hear basically the same old refrain. There was a lot of leverage builds up in the system. And while there is a lot of fundamental buyers in Bitcoin and in other places, there's a lot of leverage buying chasing the market. And when that happens, you end up with a situation where a big sell starts and people start getting liquidated and it snowballs literally like a snowball rolling down a hill. And in this particular one, supposedly $6 billion of leverage got liquidated, which is pretty brutal, going from 58,000 down to, where I think it bottomed somewhere, depending on where you look, somewhere in the low 40s. It then rallied, and then each rally has failed. And frankly, from a technical point of view, there's all sorts of positions. There's a few cross currents going on here. We'll talk technically first because people looking at this are probably listening to all these pundits who look at their charts and say, this is what you have to look at. Now, that is true, that there's a lot of that goes on in this sort of market. Understand that 50,000 looks and feels a lot like 20,000, meaning it's a round number. There are a lot of people looking at it. It rallied past 20,000 earlier this year, looked like it was safely through. A big whoosh sell-off down to 18 happened. It then flapped around between 17 and 20 for a few weeks. And then a fundamental buyer comes in, pushes through, and now all of a sudden there's no leverage in the system. It starts to grind higher. And then you add the big whoosh up with lots of leverage adding to it around New Year's, where it went from 20 to, well, it peaked over 40. So I'm not saying that that's exactly what's going to happen now, because history rhymes. It doesn't usually fully repeat. But I do think 50,000 is an extremely important level. I do expect it to take time to work its way through that. But there are some very interesting cross currents. So there have been a bunch of news stories that have come out over the last week. Every single one of them has been bullish. I'm going to repeat that because I want it to be really, really clear. There are people out there who have actually tried to twist a couple of them, but some of them are very important. One that we have talked about on this in our gathering multiple times is the settlement between Tether, Bitfinex, and the New York Attorney General. You're the lawyer, Josh. I'm curious what you think. What I think is massive dark cloud eliminated from Bitcoin. Maybe not from Tether, maybe not from Bitfinex, but massive dark cloud, because now only New Yorkers can't trade with it, but they couldn't anyway, which means that, and actually there's quotes in the release which say that, yeah, there were lots of irregularities, lots of things we don't like about it, but it looks like it's back now and they're being more transparent, and it basically means the entire crypto economy can now function without fear that Tether is going to go boom and go to zero or be taken out by legal action. So I think that's a very big deal. Before I go on other things, though, you should comment because you're the resident expert here.
Yeah, and I apologize for the leaf blower 5 feet away from my computer, so I'll try to be loud and hopefully it'll go away. But the settlement that they did is potentially cataclysmic in terms of its long-term effect. Not so much because it's going to take out Bitcoin, but because, you know, we have an accident of federalism trying to regulate what can't be regulated across geographic borders. How exactly is it that Bitfinex Tether is supposed to keep New York persons, which is broadly defined, not just people in New York, from using their products, which includes Tether? You know, we already have, you know, kind of a very bad issue with federalism in the sense that every state's trying to have a money transmitter license in addition to the federal money service business license. That's bad enough. But are we in a world now where Alabama now can sue? Because what happened here is New York sued for fraud, and that's fine. You know, they can sue for fraud. You know, no problem. I've got no problem with the lawsuit. I've got no problem with the fine. But in terms of what they're saying from a regulatory perspective, I don't know how that's not preempted by federal law. And quite honestly, it should be preempted by global law. But now I'm getting into like the la land of ideal worlds where there's actually a global regulatory of all digital assets. So put that aside, but at least federal law, because it just makes no sense. And this is not going to affect digital assets in a trading sense. It's not going to make, you know, the price of Bitcoin go up or down or anything of that nature. But, you know, just watch as this plays out long term, because, you know, I think the next legit move really would be from somebody from the state of New York to challenge this as, you know, an illegal settlement, if you will, with the state of New York, something against the Commerce Clause. Might be some kind of a due process thing, believe it or not, though that's not my area of specialty.
Wait, not so fast. That Sports Center saying, I want to point out that I'm not an attorney, but I have noted many things, both good and bad, about the Tether family of products. One is they have increased their tokens outstanding from 21 billion to up very close to $30 billion this year. And obviously that's just money going in. And I'll also note that's a positive, but Tether also accounts for 76% of the volume, according to CoinMarketCap. Whether they're right or wrong, I don't know. I'm just sharing their info. Now, without Tether, you have an issue because primarily Bitcoin's trading pair is Tether. So Bitcoin's finite, but Tether and stable coins are potentially infinite. Whereas you can have a different association create one. And, there's Binance US dollar, True US dollar, Coinbase dollar, or what's Coinbase token,
Can I stop you for a
USD.
second? I just want to be really clear because you said something that I think will freak people out, but it's completely wrong. And what's completely wrong is Tether is hugely important for altcoins, but Tether is less than a third of actual entry into Bitcoin. And the book in Tether compared to the book in dollars, particularly over the last few weeks, has been dramatically less. So be really, really clear that Tether is a facilitator for people to get into altcoins. Absolutely, for sure. That's the first point. The second point is maybe I'm missing something. Maybe you guys know something I don't. So please explain to me why this in any way makes it less likely for people outside the United States, which is where almost all the Tether volume is, will make it. It feels to me like this is very positive for the use of Tether outside the US, for sure. And
Yeah,
maybe I'm missing something.
No, I mean, to be clear, what I'm talking about, it is, I think what I'm saying is that the settlement here that New York put out there is a very silly move. You're not going to get rid of Tether, and for the reasons you guys stated, there's so much money into it. Where you somehow going to by quote fiat, different use of the word fiat, cause everybody with Tether to like trade out of Tether so that you can get all the Tether neutralized. It's never going to happen. So then what you're saying is that solely the territory of New York or people from it can't use Tether. So what are you going to have Coinbase, who knows where everybody lives because they have to, suddenly going to say, so nope, sorry, you're from New York, you can't trade in the Tether pair? It just doesn't work. That's my biggest issue.
You guys, the practical reality is virtually none of the exchanges in the United States trade Tether, with the exception of Kraken, where they don't trade very many Tether pairs. They just let Tether into dollars, and they absolutely can KYC and keep New York out. Binance US, which is not even allowed to trade with against New York residents. And I think maybe OKCoin. The others don't even support it. Tether is primarily for people who won't even accept US citizens, Binance, OKEx, Huobi, KuCoin, etc. The issue here, and I think we can go off down a lot of rabbit holes, but the issue here is Steve and I have both looked at various things in the Tether saga over the last year since we've been talking about this, as there's a potential event that could put Bitfinex or the Tether Corporation out of business. There's allegations of fraud where people could be thrown in prison. And that is a dark cloud. If that happened, that would be really bad and shut down large parts of the crypto economy for Binance, Huobi, OKEx, and all of those other exchanges. That threat is literally gone. So I'm trying to understand how that could be anything other than a massive positive for the altcoin ecosystem, because it certainly feels like it would be.
Can I add something? I'll rephrase my comment that it was, and it opened as an entryway for people to get into Bitcoin without having to actually buy, via Coinbase. And you're right, David, that the USDT pair for a number of things not named BTC are high volume, Ethereum, Litecoin, Dogecoin, the list goes on. But my only qualm with this is months ago where there was a green lighting process for banks to start, I guess, having custodian or some type of deposit. There were a number of projects, tokens on there: Bitcoin, Bitcoin Cash, Ethereum, Ethereum Classic, Litecoin, Binance US dollar, Pax Gold, Pax dollar, and USDC. And I thought it was odd that USDT was not on there. And lo and behold, maybe, it was the state of New York, so maybe that's why. What it means that, to me, Tether is the most popular stablecoin trading pair, hands down. I mean, the volumes are, primarily that. But I do believe that these other Binance US dollar, Pax, and USDC will, once they're allowed for deposit and be custodied by banks, that their popularity may increase in the US. And that's all I'm saying. I'm not negative or anything Tether. If Tether
Well, that-
went away, I think it creates a spread where people have to get out of Tether Bitcoin or Tether Dogecoin. It means the spreads would blow out and you'd probably have a spike the opposite of March, where you could see, hypothetically, you could see Tether at 80 cents and you'd see Bitcoin at 80,000 for a second or something. That's
Yeah,
But-
and we actually saw Tether drop as far as 80 cents at early points when there was a concern that they were going to lose liquidity. It actually got that low. That was a couple of years ago.
Although
And so that was bad.
we know from Doge and from Ripple that people will trade digital assets that have no use case.
oh, come on, man.
That's true
No,
though.
Come on, we're going to get there. I really want to talk about Doge. I think there's some very interesting news there, and I was going to tee up that. I want you two guys to debate that one out, but I really want to go. The point I was getting at in the beginning was there have been a bunch of news stories. So we got the Tether settlement, which is, I think, a very big deal in terms of de-risking crypto writ large.
I'm gonna make
this issue. That's all.
Yeah,
There's
this time, David, this time next year, nobody's going to remember that outside of lawyers. It's going to.
I hope so. A non-story is often good.
Yeah, no, I agree with you.
As Dan Held was commenting earlier on Twitter, what are all the Tether fudsters going to do? If you looked at the tweets of people like Nouriel Roubini or Peter Schiff, every several months when there was a drop, they would say, you see, this is because Tether was pumping up the price of Bitcoin. Well, the reality is the academic studies that I've seen are actually suggesting that that's not the case. But even if it was the case, that FUD is gone. That fear, uncertainty, and doubt is gone. And that's generally been the skeptics' biggest argument. So that was the only point I was making.
Fair enough. We can move on.
Much more important than that is the continued acceleration on the corporate side of buying a Bitcoin. Whether or not it's because he decided to take part of it as his favorite pastime, the number of 420. But Tesla buying $1.5 billion of Bitcoin is a very big deal. MicroStrategy, which is essentially now a Bitcoin fund with a profitable software business that is sort of a low growth software business associated with it, with a proven ability to raise debt to buy Bitcoin, is now, it's now kind of a big deal. You look at the numbers on this are fascinating. You're looking at the better part of 7 billion in market cap, of which more than 2/3 is made up of either Bitcoin or the ability to buy Bitcoin. And that, frankly, is what, and I hate using this word, but as an ex-bridge player, it plays really well, the Trump argument that the SEC can't ignore anymore. You now have an S&P 500 company completely legally, with nothing they can do about it, turning themselves into a Bitcoin exposure vehicle, and yet they're telling investors they can't invest directly in a Bitcoin ETF.
Oh, okay. Well,
no way.
Yeah, all right. Fair enough from an ETF perspective. I can give you that because the SEC doesn't regulate Bitcoin.
No, I know they don't. And so the point is that it's the old expression, the horses bolted the barn, except now investors are being forced, or if they want exposure, they have all these other ways of getting exposure, which have significantly more risk than a well-run BTF.
Yeah.
And now it's not just an OTC product. Now it's an NMS product.
Yeah. So, I mean, just from a 100,000 foot view, the genie's out of the bottle, guys. It has been for years. The reality is we've got an intangible asset that doesn't pay attention to borders, doesn't pay attention to regulation, doesn't require a centralized anybody to make it work. It's pretty close to impossible to regulate where it's going to go. It's like trying to keep sand from getting someplace.
Right. But it is very important to understand this, because I want to go down this rabbit hole for a second.
Yeah.
So people have said, well, the Bitcoin ETF will be a problem because all this money is going into Bitcoin through Grayscale. Well, guess what? The smart people in the market have figured out this is true. So Grayscale's premium, which was this trade, is now 2 or 3% instead of 20%. That is a very big indicator that I am not the only person who has read the tea leaves and said, okay, wait a minute. Gary Gensler is going to become in all likelihood will be confirmed in 2 weeks. He is the exact opposite of a fool. And he understands that better to have a product that they could help craft than one which is running amok by every other channel because of all the things that you just said, with MicroStrategy and other people doing this. And keep in mind, Mr. Saylor had a conference where he had 1,400 companies represented, their CFOs, 5% of which have said they're very interested and may very well do this in the next year or so. So this is a big deal. Now, why do I keep obsessing, and everyone has heard me talk about a Bitcoin ETF? I do not believe that the day a Bitcoin ETF is approved means there's going to be billions of dollars floating into the market. I think that money that's floating in the market is already flowing into the market. I do not think there's any major liquidity thing that goes crazy. What I do think is that there are in the neighborhood of $15 trillion of family offices and RIAs, and probably triple that in asset managers, who the instant there is a United States regulated NMS, National Market System stock that they can buy in their portfolios without adjusting their covenants for their investors, you will see almost immediately the investment consulting world take notice and say, I have to opine on this. And now all of a sudden, you will see a sea change. It will not happen overnight. It will take time. And people should not be trying to front run this. This is not a FOMO deal. This is when we look back 5 years from now, we're going to say 2021 was the beginning of this average 60-40 portfolio having between 2 to 5% in digital assets, full stop. Yep. That number is a big number, and 5 years on, it's going to matter a great deal.
Right.
That is the point that I'm making.
Yeah, it won't necessarily have to happen for an ETF, though. It's funny that you mentioned this, because just yesterday, one of our clients who is an RIA contacted me to say, hey, our clients are asking for Bitcoin. We've talked to one of the custody houses, I won't say which one, and they can custody it for us. I need you to write us some documents for our clients that are, the appropriate disclosures and risk factors and why it's different and everything else. And also something for our agreement that'll show, basically how we take our fee. Because, interestingly enough, it's a lot easier to take a fee in the same digital asset that you're holding than it is to try to convert it into something else and take your fee or somehow do whatever. And you know what? That's an easy ask. It is an easy ask. So if the RIAs are already of an opinion, and I think they're right, that they can do this stuff directly to Bitcoin, then, the ETF piece of it suddenly is like, okay, well, that's nice for the general populace, but the investing kind of community or the advising community, they're already there. I guess, which is part of your point in terms of not seeing a giant rocket in liquidity. They're already there.
They're getting there, but there are a lot of RIAs that are associated with large wirehouse retail brokers who actively discourage them from trading anything that their large wirehouse retail brokerage does not natively support.
That's fair.
That, in fact, that's the majority. So it's kind of a big deal, but your point is true. I mean, look, I've had multiple people ask me to give them primers on what Bitcoin and digital assets are from all walks of life over the last week or two, and that pace is accelerating. And, look, it's not going away. You have the various people, that sentence, that fragment, it's not going away. You may believe Janet Yellen talking about it was bearish. Frankly, the fact that she said it's not going away, that Jerome Powell has put someone as their head of digital innovation from TD Ameritrade, Sananya, who is a Bitcoin advocate, who I know personally and is a phenomenal person in terms of understanding the need and the importance of digital assets generally, is now the head of innovation at the Federal Reserve. These are very, very big developments. And shout out to her. Obviously, she's going to be focusing, I haven't talked to her about it, so I don't know this, so this is not inside information. I would imagine she's going to focus on the digital dollar project. Yeah. But that said, when you have a U.S. senator putting laser eyes on their icon on Twitter, and you have people like I just mentioned, this is a big deal. It is unlike 2017, 2018, when it rose meteorically and fell just as spectacularly. What you're seeing is a very different tone. It's not going away is really something that you're hearing now. And what that means is very important for the long term. So that's the other stories that we were talking about is a grudging acceptance that it's real,
Right.
but that doesn't necessarily mean bad. And that's very important to understand that the federal government is highly unlikely to do anything. I mean, not Fed chair, but one of the Fed members, Bullard, talked a few weeks ago that, yeah, gold doesn't really bother us, although we know Greenspan used to watch it like a hawk, and we were pretty sure Bernanke did too. The reality is Bitcoin would have to get to be bigger than gold before they really worried about it. That doesn't mean they won't jawbone it down from time to time, but the reality is they're not really worried about it, which means nothing that happens in the next 2 years is going to get the Federal Reserve's attention in a negative sense. They will, however, care a great deal about anti-money laundering. They will care about trying to understand the fiat on-ramps, that's for sure. But that's not the same thing as suppressing the value of the asset. So that's really kind of my view of what's been going on. I think these general stories on the corporate side, on the regulatory side, on the government side, on the settlement stuff, I think these are very big things, long-term bullish, as the market is in a consolidation pattern, very clearly range bound. There's clearly buyers in the 40s, it's somewhere in the 40,000 range up to 50, and I think above 50 right now the buyers are the FOMO crowd. That will change when the price seems to have set and you won't be able to accumulate over 50. When it breaks through 50 and you can't buy it there anymore, then the fundamental buyers will ratchet up just like they did from the 20s and the 30s. And people need to understand the buyers you have today are not chasers. I mean, Steve, you probably have a perspective on this. There is a difference between FOMO retail momentum buyers and fundamental accumulators. And that changes the way the trading happens.
I would agree. Like our general portfolio strategy, whether it's Bitcoin or commodities, options, is we spend far more time analyzing it and looking at an area versus saying I need to buy something at 50,000 and 1.0002. Like, I get that were technicals and there was resistance, but I think David and I said this, when you see a chart such as say Bitcoin or Tesla or the NASDAQ, where it's lower left to upper right, until it breaks, like, what are you seeing? What is somebody seeing bearish? Now one I can understand wants to trade a big range like 45,000 to 58,000 hypothetically and consolidate and get people who want to get out, people that want to get in, spend some time in this area, and then the next move, it's the market will decide. If the sellers, people ask why did it go up, I give them the same answer I've given for 20 years. The velocity of buyers was far outpacing the velocity of sellers on that day. I mean, it's, there's a buy order to buy 10, there's a sell order to sell 1, throw in some market orders, some guys that get margin calls or whatever they call liquidations in cryptocurrency on the short or long side. And, it is its own entity, and a comparison, I guess this is my lead into David's statement of there are 4 assets that, I guess 5, that have been around since I really started. And those also seem to be the ones on PayPal and the ones on Cash App. I actually didn't know you could buy on Cash App. A friend showed me that. And there's 6 ATMs within a mile of my house in downtown Chicago. And like I said, if people think Bitcoin is too expensive and you don't want to spend $50,000 or whatever, there's a Coinstar at our local grocery store, and you can put $10 of change, and they do take 10%, but it will give you a Bitcoin private key. So it's amazing that the largest of all projects is offering their product, or someone is, at a very, very, a very nominal dollar amount, where I'd say it becomes something's a lot more affordable at 10 than 50,000. And I think that those are good starting points. And
I feel David's blood rising on the whole discussion of the value of something being denominated on a per unit basis rather than a market cap basis. I can just feel it.
Well, I mean, yes and no, but Steve's point is real, and
Oh
that
yeah,
is
it's accessible.
try to buy gold for 50 cents. Try to buy gold for $50. I mean, you can, if you go to a gold show, you could buy a tenth of an ounce of gold in a gold coin. You can't go lower than that. And then what are you going to do with that if you're trying to accumulate savings? I mean, yes, you can buy the gold ETF in fractional shares, but look, the reality is I don't know that the groundswell of savings accounts, but I do believe that what Bitcoin does allow are some very interesting accounts. So Gemini is debuting a card. There's others, Earn and Fold and others. There are plenty of places now where you can do credit cards, which you will earn your rewards instead of the 3% cash back or 2% cash back in Bitcoin. And to be blunt, what I think? I mean, that all of a sudden you're now introducing savings of Bitcoin to the literal masses in a way that is painless and easy. And if you tell them, listen, hold it for a long time, and all of a sudden you may find out you have something that's really worth it. That's a story that resonates. And now all of a sudden you have a huge source of excess demand for people who buy the story that the Federal Reserve has told you. We want to depreciate the dollar by 2% a year. We want to depreciate it by more than 2% a year. That's what they're saying. Now, I'm not Weimar hyperinflationist nonsense. I mean, it could happen, I guess, but I think it's beyond incredibly unlikely. But the fact that the Federal Reserve tells you that they want to make your savings account worth less money every single year because your interest rate is below their inflation target, you should listen. It's Maya Angelou. When someone tells you what they're doing, believe them the first time. So why would anyone rationally hold dollars? Why would anyone rationally hold 10-year bonds that are paying an interest rate less than the Federal Reserve says they want to devalue the dollar? So you all of a sudden have this pool of people, of savers, that have to find something to save in. And you have products popping up all over the place, allowing them to do it. To me, what Steve was saying, whether it's Coinstar or a credit card rewards, it's a big deal. So no, my blood pressure is not rising. Steve's right. It really is that way to get the average person to be able to save.
And I guess my other point on that is we may know that Bitcoin is 100 million Satoshi and that it goes out 8 decimals. But I would ask anyone listening, if you're not familiar with Bitcoin or crypto, or those that are, the first time you ever heard of it, somebody goes, it's $10 or $100 or 10 million. Many, myself included, didn't know why everything was 8 decimals when I first looked at why is it 0.000. And the dollar amount, I feel, I've heard from friends of mine, it's like, wow, I can't buy Bitcoin. It's 50,000 or 40,000 or 10, whatever it was. Then later it's, oh man, I should have listened to you. I go, you don't have to buy $50,000 worth. You can buy $5. Well, I think with the transfer fees, you probably wouldn't buy $5 worth, but
From Coinstar, maybe.
I'm going to make a very simple point. I'm going to say something that a lot of the people in the Bitcoin community, I actually haven't heard it said this way, but I believe that is a very real chance, and Josh is going to laugh at me now, that at some point in the next 2 decades, the term millionaire will be gone and the term Bitcoinaire will become relevant, because if you hold 1 Bitcoin, you will be considered wealthy. And I think that is a very real possibility given the trajectory we are on. There are only 21 million of them, and there are 41 million millionaires in the world. The order of magnitude is basically right. Now,
I get where you're going. I would argue with you linguistically only because I view Bitcoin as a commodity. And it's like saying, you're a oil derrick heir or a gold mine heir. Is kind of how I hear it. But I understand what you're saying. $1 million definitely is not what it used to be. All you have to do is live in Southern California and try to buy a house to understand how that works.
That's right. No, I get it. But my point is that the number of people on the earth who will own a full Bitcoin will be a very small, it already is, but it will be a very small percentage of the population that considers Bitcoin as valuable property. That is a very important point. So Steve's point is very well taken. It is true. Look, if you want to know, like you hear various people, the Winklevoss twins talk about this all the time, to know how early we are, the number of percentage of people on the earth who own some crypto is a very small percentage. So the reality is we are still early, and early has implications. It means the volatility is going to be crazy still. Look, I've said many times, Bitcoin trades like an option. It does. It just does. I mean, its volatility is breathtaking. But the reality is, get it to where it was going to be, and its volatility will no longer be an issue. The reality is, it's something to be saved. And I can't go beyond the fact that forget hyperinflation, forget get rich quick. But if I want to save and I want to put my money in something that to save money, when I was a kid, we used to learn in my high school economics class, you put your money in a passbook savings account, and in N number of years, it will double, and you can build it. You hear about entrepreneurs from the 1700s and 1800s who put their money in savings accounts that they earned as wage earners as a job, and were able to invest it to build businesses. Literally impossible in a world where your money is targeted by the government to be worth less than you're getting paid in interest. It forces different things. So it forces you to buy stocks or whatever. And that's one of the reasons I always harp about asset inflation. But the fact is, the world needs a unit of something to save in where it is actually savings. And whether Bitcoin will be that thing or not is not determined. I want that really clear, because if it was determined, it would have an extra zero on the end of its price at a minimum. So it is not determined yet. So the sole question is it a likely winner in that race to be something people save in? If the answer is yes, then stick a zero or maybe 2 zeros on it. If the answer is no, it may fade. And that's the reality. And so that's going to be volatile until that question is answered. I know I say this almost every week, but it needs to be said. I say it as often as
you do, and I have the same reaction as always.
Yeah. Hey guys, I gotta run in like 5 minutes, but could we possibly have a closing talk regarding this project that if you listen to all the past, yeah,
go for it.
Well, I
have to jump 4 minutes ago, guys. I'm sorry.
I'm gonna put my just things that I've said for
David. I made you the host. I've got a client waiting. Bye, everybody.
Okay.
All right. Bye, Josh.
Bye, Mr. Lawler. All right. So yeah, I got a couple minutes, but I guess it was one of the first things that I actually had when I had Bitcoin, Litecoin, Dogecoin, and Ethereum. Why? I couldn't tell you. It just the cards were dealt that way. And then my son saw the Dogecoin meme on Roblox, this game that's very popular amongst him and his friends. And I think, wow, and there's a game called mining, and they call them blocks. And you saw this Doge meme looking like the Dogecoin symbol in it. I'm thinking to myself, wow, if that's not marketing, if it's just by chance, that's pretty good marketing on, getting people to know that symbol early. And when I hear people say, well, there's no use or it's a joke, well, my theory on markets is, well, this is what it is now. If, I think my son, who's right here, he, back when it was really not expensive, I think $1,000 bought 2 million. So, I mean, if that's a joke, then hey, I like jokes, but the community is large. Its transfer fees are small. Its transfer times are relatively quick. It's on pretty much most of the large exchanges that one might look at. The only exchange that it's not on, where if it were to get on Coinbase, then I would say that you could see a truly parabolic rise, or in my opinion. But I guess the fire underneath this last one where they said, oh, it's a pump group or it's Reddit. You know how many things have to go into that? I mean, David, think about it. So you have to open an account. You have to go to Coinbase, open an account, link your bank account, open an account in Exchange A, send Bitcoin there, buy Dogecoin, and happen to have come across that Reddit thread and believe someone that you didn't know. So I find that hard to believe, but I also think that in capital markets, and Dave, you might echo this, there's this gentleman who was the wealthiest person in the world many, many, many years. His name is Warren Buffett out of Nebraska. And when people saw him add something to his portfolio or him give a positive comment about an equity or even a commodity, I remember being silver, or a gentleman named Carl Icahn, when he might take a position in something, people became interested. It's, you know, you have a multi-billionaire investor. Well, I'm going to at least pay attention, but you get the world's wealthiest person to say they like this. I think there's two things. I'm either flat it or I own it. But saying that it's a joke or whatever, I wouldn't bet. I don't know why someone would bet capital against Elon Musk. You may not believe that in Tesla or what, but I've seen many a person get blown out shorting Tesla and betting against them. And it's like, wow, how many people have done that? So I guess the world's wealthiest person saying, I'm interested in this, and knowing that I think his balance sheet is 200 billion and Dogecoin is like a couple billion. So if someone wanted to make a point like that, well, gosh, I mean, could you imagine? I don't know what nothing is to them. Maybe, I don't know, 200 million, like 1%. And somebody throws 200 million at the market, you could see things. Is he going to? No, but I am a Doge holder. I have been for a long time. And I think it's useful in the trading world. It's useful because it has namesake to kids like my son, where he has a Dogecoin shirt. He got it in 2016. So whether this price or not is right, whether Bitcoin 50,000 or 500,000 or 5,000, I bet you probably trades all those prices in the next few years. And each one of them at that moment in time is the correct price, you know. But I think that people that don't, you know, that really are anti-Doge, I'd say how many projects in their portfolio, with the exception of Bitcoin, have been around longer than it? I mean, it's stood
It's
a
a
test
really
of time.
interesting one. I think the real question, the only question that comes up about Doge is it infinitely mintable, or is there a policy to keep the supply under, you know, to not have it inflate like crazy? That's really the question. I think that once you get past that, then it becomes, I made a comment about to Nouriel Roubini. It was about Bitcoin, but this is a very important point. He made the idiotic assertion that Bitcoin was a self-fulfilling bubble, and what he was saying is people start believing it has value, therefore it has value, therefore it goes higher and higher. Well, the reality is it's not a self-fulfilling bubble; it's a self-fulfilling prophecy. If enough people believe something has value and they hold on to them, then it has value. Baseball cards is a great example. At one point, baseball cards were kids just swapped them back and forth, and it was called kids. Nobody cared. Today, baseball cards are recognized to have value, just like one of the reasons NFTs have value. The reality is why? It's paper printed on cardboard that literally could have been minted infinitely. It just happened to be that it wasn't. And all of a sudden, you now have thousands of dollars, you know, cards that are worth, you know, a lot, you know, serious money. The point that I'm making here is, you know, as long as it can't be inflated away and effectively stolen in terms of value, if the population decides something has value, then it's going to have value. And you know, look, we have all sorts of things that don't make any sense. and have not made sense for 50 years or longer. So, who's to say? And that's kind of the point that I have. I think your points are well taken. I think that it really is a question of, as long as it can't like have some catastrophic news event that makes people say, well, what the hell? There were 6 billion Doge. I don't know what the number is. Now there's 50. As long as that can't happen, then sure, why not?
Well, far as I know this is going to sound weird. This will be my closing statement. But the Ethereum model of bringing coins to life, so to speak, I know it's the mining parts are far different, but Dogecoin is finite by year, but the years are infinite, theoretically. And the same goes for Ethereum. It's a very, very similar model where a certain number of Ethereum come out each year. The block times are expected to be X. They seem to be on target, nothing major. But the question is, well, it's a commodity, it's used, it's a platform. So if there were a finite amount of Ethereum, I would say that Bitcoin's unique, like it is. But I think having Ethereum or Doge where it is finite by year, like they can't just print money because of a pandemic, or they can't print Doge coins. But in 50 years or 100 years, like if, say, Bitcoin didn't move, say it was $48,000 in 50 years from now, I know crazy things have happened, but Ethereum's keeps coming out after the last Bitcoin spit out, and then what happens? I don't know. Like I can't predict the future, but I think that it's good to have some of both. Something where I don't think that. Well, I'll leave it at that. But I got to run.
I don't have any strong opinions. My opinion is. My issue with Ethereum, I have no issue with it. I think that ultimately the smart contract universe and DeFi as an asset class will be dramatically more valuable than what the sum total of the crypto assets are worth today. On the other hand, I worry about gas fees, and I worry about a lot of things. Ethereum right now has some issues, but could very well grow into market cap dramatically larger than where it is today. And that's why I've talked about in the past things like Polkadot. We mentioned Cardano earlier. The reality is, other people are talking about others, etc. The fact is there's an enormous financialization use case for distributed finance, and it's going to take a while to get there. One of the tokens, one of the other issues is look, if Dogecoin or any of these other coins become something that people ascribe value to, it's going to have value, and that value will be, as you say, what people ascribe to it. And yeah, it could become worth more. And if you have an entire group of people who say, this is important, I want to own it, and this is what I want to trade back and forth, sure. It memes. Look, stock. If companies could become memes, then clearly crypto assets can become memes.
I think there's a coin called Meme, actually, if I'm not mistaken. There is a meme, or meme coin, as I call it, where I don't know. I think they've actually done okay, but I got one more closing statement regarding what you were saying about Ethereum gas prices and how it could potentially affect it. Is I talked to some people at smaller exchanges, like exchanges where they're $1 million of true volume, or a few million, where they're definitely not amongst the top 10 or 20 in terms of volume, but guys that want to have 100, an Ethereum or half an Ethereum or whatever. It's not massive exchanges, but many of those exchanges don't update their gas fee multiple times a day. And there were some issues where people sent, I don't know, I guess you'd call it fractional shares of Ethereum, or a portion thereof, and they got hung up for a long time, where because the exchange was not staying up to date on the gas fee, like Exodus Wallet or whatever does. But that would be the only issue I see where you would get people that are, using fractional Ethereum, sending it and getting a bad taste in their mouth. But,
These
everything.
things will play out over a long period of time. That's
Yeah.
the reality. And I think you and I both know from the trading point of view that there will be bull runs, there will be range bound trading, there will be dumps, etc. If you generally believe in digital assets, then generally be in digital assets. And the single most important point to any trader, we haven't mentioned it this, obviously not investment advice, do your own research, but the single most important piece of advice I will give people is not to buy or sell, is not about that. It's be exceedingly careful with leverage. And in fact, my advice to pretty much everybody is, unless you know what you're doing and you're focused on trading and you actually have experience, I wouldn't use leverage, because people don't understand what can happen. My closing statement is about what happened on Kraken. So on Kraken, they had Ethereum printed all the way down to 700 because of forced liquidations due to leverage. Kraken's response to this was their systems perform normally and people need to be very careful with leverage. That is true. Listen to them. They're telling you the truth. Be very, very careful with leverage situations where there could be forced liquidations, because you could ultimately end up losing the money you set out to invest without realizing that you were at risk. And a lot of people need to understand that. So from an educational point of view, be extremely careful with leverage is the most important thing I would say when you look at the crypto world.
An old school board of trade saying was, people that might go, I'll bet the farm on that. And people would be like, yeah, bet the farm. You can lose the farm too. It's not always, I'll bet the farm on that and win. There's a reason that there's two-sided markets. But I got to run. So anybody that's watching, thank you. We'll see you next week. And bye, David. We'll talk next week.